Malcolm, I have to do something that I don't like to do to start the show, which is I need to tell you that you're right.
Go on.
About conversations that we have had on the show where I have done the full circle on Netflix now, and I've gone back to being bearish with bringing in Warner Brothers Discovery. And for people who have not listened to previous shows, welcome new listeners. I hope you stay around and maybe even rate and leave a comment. However,
and check out the archives.
I have been playing with this idea that Netflix buying Warner Brothers Discovery is a mark of dominance, and this is going to end up being a good thing for the company because it crushes one of the bearish cases that more competitors are springing up for Netflix. That's not necessarily good for consumers. This is just the cold-blooded looking at the stock case. And then I looked at the debt, which people were worried about Netflix covering the debt that Warner Brothers Discovery would bring on. So I go through, I use Grok to look at the earnings and then all of the debt that Warner Brothers would be bringing into the new enterprise. And I go, you know what? Netflix could comfortably cover this, even if Warner Brothers Discovery absolutely contributes $0 in earnings. And then I thought about it more, Malcolm, and here's where I got to. I think this may be one of those cases where, there's an Aubrey Plaza movie that was really good about her time traveling to go visit her teenage self. And
I'll take your word for it.
She tells her teenage, it's a very sweet movie. She tells her teenage self, she's like, what is something you want to know? Like, basically, like, what do you want to, she asks her a question about the future. Mm-hmm. And she says, you're going to get what you want, but you still won't be happy. And I think that might be true for this Netflix deal, because I think they may get what they want, and then they could be awarded a conglomerate discount by investors, where some companies have broken out of this. Google has made a lot of acquisitions, and they still are awarded a high multiple. Berkshire Hathaway has never had a problem with this. However, in those two cases, in Google, there was always a belief that Google was on the cutting edge, and Berkshire Hathaway had a goat of buying up assets, if you will, in Warren Buffett. I don't think Netflix has that. And when you're bringing in Warner Brothers Discovery as 20%-ish of your new enterprise, you're a little less K-pop Demon Hunters and a little more Hanna-Barbera to the street. And so I got to this place where I'm like, okay, so given everything that I've looked at, there are fundamentals here, but I think the story, which I think about a lot, may materially change to have a conglomerate discount for Warner Brothers Discovery, where the focus is going to zoom in on that for the next, I don't even know how long, but I think that may end up, affecting the multiple in a long-term way that's not good for Netflix. Anyway, that's a long way of saying I think you're right.
If I can distill that down, it sounds like you're saying WBD is going to be a bad culture fit for Netflix, and the street is going to discount how terrible that culture fit is.
I don't necessarily know, because I think there are great programmers there. Mm-hmm. Mike DeLuca and Pam Abbey are some of the, is one of the greatest things to happen to movies in, I don't even know how long, but like right now with this moment, where you're getting one battle after another, you're getting Sinners, you're getting fun horror movies coming out of Warner Brothers Discovery specifically because of that. I don't know if HBO will be a bad culture fit for Netflix. What I am saying is that Netflix has been able to survive on a story that we are a young upstart company.
Yeah.
And once you drag in...
That's the culture aspect that I mean. Not necessarily that the people inside the company suck, but more so that their cultures. One is made of bureaucracy and long pipelines to get something into production, and the other one is move fast and break things. And so together, can those cultures survive under the same umbrella? Remains to be seen. I get your point. Yeah.
So anyway, that's how you can maybe tell me what I've been right about and what you've been wrong about on a future show. And I don't even know if I'm wrong about this. This is just something where I've changed my mind, which I reserve the right to do with new information and new thoughts.
I'll take it as a win no matter what. Like, nobody at my house is going to tell me I was right. And so apparently I got to come here to get these kind of pats on the back. So I'll take it any day.
This is why we podcast. And then there was another topic I was going to do. The order of this show doesn't matter to the listener, but you're fired up about letters of intent right now and the drama going on between Oracle, OpenAI, and Nvidia.
Yeah. So on a previous show, I don't even remember which one it was, but on a previous show, I was making the case to you that one of the things that makes me most concerned about the data center build outs that are happening right now are the fact that they're being done on spec. And what that essentially means is you're building a thing without having a actual tenant already locked in, or you're building it on speculation with the hopes that once we build it, they will come. And a lot of what's happening among all the hyperscalers, Microsoft, Amazon, Meta, whoever, is they're working with these developers to develop these data centers just on the back of a letter of intent that is not binding in any way. And that is what has been governing this space for the last few years. And so you got all this mega build that's happening where these companies at any moment have the ability to walk away by saying, didn't really actually suit our needs, took too long to get to completion and we had to move on. The servers that we initially thought we were going to install don't require the level of square footage that we thought we would. Any number of things allow them to walk away from the deal. And here we go again with allegedly Sam Altman saying to Nvidia, your chips aren't good enough. We don't need what we committed to initially from you because your chips aren't going to get us where we need to be. Now, if Nvidia's GPUs are not good enough for you, whose are? And so that whole, it's like the friend that is perpetually single because their standards are so high that nobody's ever going to meet them. And every time you talk to them, they're like, I'm just waiting on the perfect one. Well, if this particular relationship isn't good enough for you, what is ever going to be good for you? And so anybody who's ever interested in dating you in the future is going to look at that person and go, you passed up on them? So none of it makes any sense to me. And that is the problem that the market is having right now with OpenAI / Sam Altman having so much sway over the entire AI revolution. This one person and one company has driven so much of the narrative. It's driven it up and to the right, but it's also now driving it right back down.
What is the common denominator in all of your failed relationships? And the answer is you. This is, I guess we're really getting into the show. Let's do a quick intro break. And then after, we're going to continue this conversation with OpenAI and private credit. SpaceX is also IPOing. And then I have a way, because the Super Bowl has passed, to actually beat the sports books. But it's probably not what you think. All right, let's get into it. Malcolm, I think this story with OpenAI, it bleeds into private credit. You even have Oracle coming out, your favorite company, Oracle, coming out and tweeting the Nvidia OpenAI deal has zero impact on our financial relationship with OpenAI. We remain highly confident in OpenAI's ability to raise funds and meet its commitments. Some of this may seem to come from a frostier relationship with OpenAI and Nvidia, where we don't know who at Nvidia is leaking to the New York Times, but now you have the not the New York Times, the Wall Street Journal reporting that there are sources inside of Nvidia who are reporting that Jensen Huang is not so happy with Sam Altman, and reminding everyone that $100 billion commitment they have to invest in OpenAI is not a guarantee. It's contingent on separate power buildouts. And I don't know if this is a blip or the start of a story that has been propping up the economy falling apart a little bit.
I would imagine it's more the latter.
Okay.
So I was just on CNBC a few days ago, and I remade the argument that the hyperscalers, the Mag 7, make up 40%, I think, of the S&P's constituents, maybe 35% at this point. But in order for this rotation away from the Mag 7 and to get us to stop saying that name to actually take hold, something meaningfully bad is going to happen first to get from 8, 7, 6% weightings for each of these companies back down to something like 2 or 3, where they don't drive the entire market in one day. And each time I've made that argument, the rest of the panel has shunned me, laughed, and told me that's absolutely not true. There's no way that happens. This is the making of exactly that. So back in October, we had the Sam Altman, Brad Gerstner, Satya Nadella interview where things first started to fall apart and the world started to fall out of love with Sam Altman. And now we have more and more of that fracture happening in public. And so God knows what's happening in the background that we can't all see. But so much of everything that's been built has been built on the promise, the commitment, the handshake deal, the announcement of the framework of a deal. Like all of these things that aren't really tangible are what has been propping up the whole thing. And it goes back to the wrestling analogy that you love so much when I make it.
You make this analogy every time and you accuse me of loving it. I don't,
because I know how much you hate it.
Keep
but
going.
It is the same. Like we are no longer willing to suspend our disbelief. And now here we are sitting somewhere around 2015, 16, 17. The WWE doesn't have the same level of devotion and committed fans and everything else that they used to have. They got to keep pulling all the, all the old wrestlers off the shelf and get Ric Flair to dance around the ring and pull The Rock back 50 million times and make him the CEO. Because what else do we have? The viewers aren't buying it anymore. And that, I think, is where we might be headed. And I hope I'm wrong, because that would be very dangerous if that is the case, dangerous for the markets, I mean. But I do think that this looks like the direction that things are headed.
I'm not entirely... Okay, I have two thoughts. Number one is, let us know in the comments. I'm starting to think that Malcolm is sort of a closeted professional wrestling fan because he keeps bringing up kayfabe and pro wrestling.
No, I told you, I grew up on it. I loved it as a kid. Like that was my jam. But there came a point in the late 2000s, I'll say, where the narrative just started to fall apart. And there was really nothing Vince McMahon could do. There was only so many times he could throw himself into the ring and fight some big name celebrity with a gold comb over that everybody was going to be willing to tune in and watch to see if he'd be forced to shave his head. Like you can't really run that play so many times.
You can with Bad Bunny. A lot of people liked that one. I guess the point of that though is, so what's the metaphor with, they're pulling, you're just saying the story is getting old with AI and they're trying to tell the markets the same story again and again.
No.
Hoping to see it there with like old wrestlers being pulled off the shelf. That's the part I don't entirely get.
No, I'm saying our willingness to suspend our disbelief and watch the thing and pretend like we don't see that the outcome is already scripted and enjoy what we're looking at and participate in it even. Like our willingness to do that has slipped away or is slipping away, all because one of the biggest stars of the show, Sam Altman, seems to be doing everything he can to convince people that this isn't what you want.
Yeah. And you're even starting to see Nvidia slowly back away from that relationship. And those relationships are ultimately one of the things that made this story so powerful. The other place you're seeing the effect of this is in private credit, where I think when we were chatting about this, there's a lot of private credit funds that are buying into these build outs because a lot of big companies want to shift their debt from these big data center build outs to somewhere else. And that's kind of been the bucket for it. But this is something where you're starting to see some cracks as well.
Well, it's two completely separate things that are happening simultaneously. So private credit is essentially the conglomerates that stepped in to offer financing to these mid-size, not even small or large, the mid-size companies following the great financial crisis. So the GFC made a bunch of banks tighten up on their lending standards. They'd only lend basically into the Fortune 500 or really close to it. And then that left the mid-tier off limits. And so a bunch of these companies spun up to allow themselves to offer in this space. So private credit funds were created by alternative asset managers, Blackstone, KKR, Apollo, so on and so on. I think Ares is like the biggest player in this space. But then separately from that, these business development companies were spun up as a way to create a joint venture between the companies that needed to borrow to build out these data centers that didn't want to have that debt fully on their balance sheet. So one of the more popular ones is one that's through Blue Owl that helps to fund Meta's build out. And it's like an 80-20 partnership where Blue Owl's on the hook for 80% of it. Meta's on the hook for the other 20. But the way that they structured it, again, the debt doesn't show up as part of Meta's balance sheet. And that's being done all over all of the hyperscalers that are making these massive build outs. And the nature of private funding is that we don't actually know all of the details and parameters and who's involved in the story and everything else. But in private credit loans specifically, there's this feature called payments in kind loans, where basically you take out a second loan to cover the interest payments that you'd have to make on the first loan. And you avoid having to make any actual interest payments using cash for some time, because the theory is with your capital, we're going to grow so fast that we grow ourselves into being cash flow positive. And that's where we start to service the debt and get you paid off. So give us 7 years, give us a 7-year window. We'll ramp up sales so fast that we can then pay off the entire thing or restructure the loan using permanent financing or something else. And what companies are more likely to want and need a payments in kind feature baked into their loan? Tech companies. So all of the software companies now that are private, they're smaller, they're targets for like a Thoma Bravo PE fund, they're targets for like a Vista equity fund. Those guys play in that software space, especially in the mid-tier. And those are the companies right now that I'm very concerned have these private loans. They have the payments in kind features in them, which means they haven't paid very much principal, if any at all. And as the public markets are seeing all of the software stocks get sold off carte blanche, you got, Salesforce and you got ServiceNow, and even Microsoft is now we're being reminded that the soft part of the name stands for software. Like all of these different companies that have sold off in the public markets make me concerned for how much is actually happening underneath the surface in the private credit market. You couple that with the fact that the BDCs that are also produced and run by these alternative asset managers are taking it on the chin in these two. So the yields on them are now like 12%. And so that's what's capturing people's attention and making them be willing to jump into them. All of that happening simultaneously underneath the hood of the same companies in these alternatives, to me, looks like we're the next gigantic domino is falling.
At the business development companies. Also worth noting, Jensen Huang said recently that the software sell-off is, quote, the most illogical thing in the world. That a lot of these AI programs, the worry was that Anthropic is going to replicate a lot of these software systems, essentially. And I mean, we've talked about it on the show before, but we're going to use an entirely new bespoke AI created software system to replace what we have with Salesforce or ServiceNow may not be entirely true. And this was a quote from the Wall Street Journal that really caught my attention, saying, "No one wants to find out they are holding the equivalent of Chegg," end quote. And I think these are two completely separate stories, because Chegg was...
But both true.
What?
Two completely separate stories, but both true.
Yeah. Well, I think Chegg is entirely different from a lot of these software companies that are being affected by that. Hey, maybe this will happen to them. This strikes me as a little bit like, if people remember when it's not entirely the same, but it's some parallels, where Charles Schwab, was beat up when Silicon Valley Bank went bust. That, hey, there's going to be other runs. So, well, Chegg.
The reason I say that, though, the reason Chegg could be sort of the canary in the coal mine for some companies is because this is as dumb as these AI tools are ever going to be. So if you just think about how impressive certain functions of Claude, like Claude Code, or certain parts of ChatGPT, certain parts of this is as bad as it's ever going to get. And so if this is the floor, there is a clear case where some of these companies will be completely obliterated because the AI tool that is still in a development phase today, they're still working it out. 5 years from now, God knows what it'll be able to do.
That's fair. I also think, though, that Chegg was essentially a paywall to get homework answers. Mm-hmm. And then ChatGPT comes along and says, "Oh, we can help you with your engineering homework. We can tell you step by step how these calculations are done." I think there's more of a trust barrier, but you're absolutely right. These are these LLMs are getting so much smarter. Today's the youngest you'll ever be, and today's the dumbest the LLMs will ever be as we go into the future. So I hear what you're saying, but I also I still think
that's why I say both are true at the same time. There are probably a ton of chegs out there, maybe even in the private space, in the private markets right now that are owned by PE firms or being invested in with private credit money. And then there are a ton of Salesforces and ServiceNows and Microsofts out there that more than likely figure out a way to get there, and also more than likely have a customer base that can't afford to be wrong, taking a chance on something that was spun up using Claude code. And so I think both of those things happen at the same time.
I think that's fair. Let me hit this Starbucks story real quick. So Starbucks kind of coming back on my radar. We've talked about how difficult things are in the food, specifically the food industry. And a lot of restaurants are having people struggling to get people to come in. They have to use more discounts and promotions. Secret sauce might be coming back, or might already be back. I may have underweighted the value of Brian Niccol to turn Starbucks around. Brian Niccol was the CEO of Chipotle, which I think he had another turnaround story there. Anyway, the stock did really well under him. I was looking, and he has this back to Starbucks plan, which is essentially, what if we made our cafes inviting for people to come and sit down and enjoy a drink? And there's union heat on him. There is Starbucks workers on Reddit who don't like that they have to write something cute on all of the to-go coffee mugs or coffee cups.
I don't love it either as a customer.
I think I don't want to get to, if I know you, that's great, but we don't have to force it. A smiley face works. We don't need to do a quote.
Just say good morning.
Good morning works too. Anyway, knowing everything you know about how, people are cutting back on their spending and maybe even going out to eat a little bit less because of the cost of food. Starbucks has 4% comp sales growth, and 3% of that, most of it, I should just say, comes from more people coming in the door. So even in this environment that's extraordinarily difficult for restaurants, I'll throw a beverage in there as well. There's a lower base where you essentially had a highly paid consultant telling Starbucks that the answer to more growth was going to be these chemical tasting, no chairs and chemical tasting energy drinks. But it seems like the build out under Niccol is starting to work. And that's something that has caught my attention.
I haven't seen any of these newfangled Starbucks stores that look like the third place all over again. I've seen what looks more like Starbucks Express, where the focus is the drive-thru and there's like 10 cars in the line. And by the time I go inside, order my thing, pay for my thing, get my thing, and walk back out to my car, all of the cars that were there when I pulled up are gone. So I should have gone through the drive-thru. Like, that's what I've observed about Starbucks in this turnaround time.
It looks like the new stores look like what I kind of wish Barnes and Noble looked like. Where it's like nice bench seating. There's like some decent looking artwork on the wall. It looks warmer and like a place that you want to sit down at. Wait, so you're saying that the drive-thru got more efficient under?
Yeah, they cater almost exclusively to the drive-thru. And then if you happen to be inside I was going to call it restaurant, I guess cafe is what you call it. If you happen to be inside the store, we'll get to you when we get to you. You should have ordered on the app. That's the feeling that I get. Okay. And so unless I'm there at 6 a.m. and nobody else is there yet, but otherwise that's the feeling that I've got. But I also think it makes sense for them to focus and prioritize on the drive-thru if people aren't coming into the store and you still want to sell $7 coffee. And so it made perfect sense to me. I think this is more like a McDonald's thing where you don't really need to worry about convincing people that Starbucks is the place to get your coffee. You need to focus on getting more Starbucks closer to where the people are so that it's an easy choice for them. Like, I don't understand why McDonald's still advertises. Completely sidebar. But like, who in the world is alive in America today who doesn't know what McDonald's is? So however many billions of dollars maybe they spend on advertising every year, I'd like to see them take one quarter, not advertise one lick, and see if their sales go up. or stay the same. That's more important. If their sales stay the same, they could repurpose that entire $1 billion marketing budget into just opening new McDonald's locations closer to where people live. Because the only thing stopping people from going to McDonald's is distance. It's not awareness.
I think you underestimate the value of reminding people that you have something that they can eat close to when they are hungry, which is a 3 times a day problem.
When you're Shake Shack, yes. When you are Five Guys Burgers and Fries, yes. When you're McDonald's, it's an institution. Like, movies have been made about McDonald's. You don't need to remind people that you're there or what you do. Just build more of them closer to more people, and you will see your sales go up. I bet you the same is true for Starbucks.
Okay.
Nobody doesn't know what the Starbucks logo is now.
Let me stay on Starbucks for a moment before I just start arguing with you about McDonald's. I was looking through the investor day, Niccol reminding investors that it's like 60% of their business is people walking into the cafe. So that's where we're going to focus. And also, by the way, if you just took our drive-through coffee business, that would be a separate Fortune 500 company, just in terms of revenue. And I think the big question I have is if they can figure out food. I think that would be one of the biggest growth levers for Starbucks, because right now we have a frozen breakfast sandwich that we can heat up real quick for you, but it's also difficult to really do a more complex food build out when you have tens of thousands of stores everywhere that are primarily set up to serve coffee.
You also have to decide who you are. Are you a coffee spot or are you a food and coffee spot? Because if I'm prioritizing the drive-through traffic or even the quick walk-in traffic first thing in the morning, I need to get coffee made and poured as quickly as I possibly can. And having my barista stop to go throw stuff in that warmer and then remember to get it out and hand it to like that wastes so much time compared to the margin that I have to believe exists in a $7 drink where you charge by the pump of caramel that you add to this thing.
All of that is to say, Starbucks on my radar, have not bought shares, but it's something that is definitely on my watch list.
This episode is sponsored by Capital Area Planning Group. Capital Area Planning Group is a fiduciary wealth management firm that specializes in helping high net worth individuals and families navigate the complexities that come along with managing concentrated stock options, multiple income streams, and an ever-changing tax code. While our team of certified financial planners are well-versed in all things personal finance, our areas of expertise include equity compensation, estate planning, and multi-year tax planning. At Capital Area Planning Group, we believe in pricing transparency. That's why our fees are posted on our website, right alongside the various services we perform on behalf of our clients throughout the year. If you're tired of receiving the same cookie-cutter advice from your financial advisor, then don't wait. Reach out to us today at capgllc.com to experience a better approach to wealth management. Again, that web address is www.capgllc.com.
Let's get to the SpaceX XAI story. First part of the story is that SpaceX has acquired XAI for $250 billion. And the less charitable explanation is that XAI needs an ATM that can fund its LLM ambitions. And this is something that, to be clear, Musk has done before. There is in some cases, it's for good, incestuous relationship between the Musk enterprises where, hey, we're going to have a SpaceX engineer work at Tesla, and then we're going to have a Tesla engineer who knows all about the car materials working at SpaceX, and we can use this heat shield technology to improve our Tesla cars. The more charitable explanation for this is that we're going to get data centers in space, and in doing so, we need XAI to be integrated with SpaceX. You seem to be smirking at that. I don't know why you are. I want a data center in space.
This whole thing excites me. I can't believe it's taken us this long to get to this story in this show, because this is classic Elon Musk. There have been cases in the past where he's gotten in trouble with, I don't know if it's the California Attorney General or the Delaware Chancery Court or the U.S. Attorney General or some mix of all of the above, for taking money from one enterprise to fund the other. He's done this switcheroo so many times in the past that it's like common knowledge that Elon basically uses funding from his profitable thing to fund his unprofitable thing and makes a chips to the middle of the table, burn all the boats type bet every couple of years. And this is the culmination of that. And the reason he's able to do such newfangled financial engineering this time and doesn't have to keep it sort of hush hush and under the hood is because in this administration with this SEC, who cares, right? But if you think about the funding secured tweet that almost cost him sanction from the SEC before, and the DOJ was after him and everything else, like those days are behind him. So he doesn't have to hide the magic trick. He can do it he can make the elephant disappear in front of all of our very eyes. And so this is fascinating to me because clearly the demand, nobody's asking where's XAI, right? Like for the last 2 years, when I'm on CNBC, the big conversation when we talk about AI is, where's Apple in this conversation? Why isn't Apple participating here? Is Apple here at school today? Nobody's asking about XAI. Nobody cares. Nobody wants this. However, he wants this, and he wants it so badly that he put a $250 billion valuation on it himself, tucked it into the company that everybody is excited about and has been clamoring for the IPO. And so as this merger is happening, he also made sure to say the IPO is still on. So this basically was a way to IPO XAI ahead of Anthropic and OpenAI.
So much of this screams weird to me. And here's one part that is a little strange. Is just the roundness of the numbers. And I know that sounds weird, but we're saying SpaceX is $1 trillion and
yes.
XAI is $250 billion.
Yes.
Like it just, for this amount of money, it just seems like that's a very Lego block type valuation for things that nobody really like. I'm sure Wall Street analysts are very smart. I think if you look me in the eyes long enough, we'll all agree that you really don't know how to value SpaceX. And the same I would say with probably XAI. So let's make up a big number and go from there.
But people are willing to pay for SpaceX. That's the thing. Like there's been a ton of, there was just a tender offer that happened where, employees who wanted to sell some of their shares internally had an opportunity to do so. And it was oversubscribed with people in the secondaries market wanting those shares. There's also the employees that are like, from my cold dead hands, you'll never get these shares from me because this company is going to the moon, literally and figuratively. Like, so there is a ton of excitement for SpaceX and what it can do and the promise of, sending a rocket to the moon and then landing it back safely like nothing ever happened. That is fascinating.
Yeah, I don't want to... quickly.
XAI, not so much.
I don't want to undervalue the, we'll call it the moat of a company that is able to send a rocket into space and then catch it with chopsticks when it lands back on the Earth. That is an incredible engineering feat. It's also like seeing the valuation of SpaceX is why a couple of years ago I was like, what about Rocket Lab? What if we can get second place here? It seems weird that one of these companies is worth close to $1 trillion, and the other one that definitely far behind in second place, but can still send rockets into space is valued at less than or close to less than $1 billion. Let's take a shot on goal here.
What's the most valuable sports franchise of all the sports? I'm gonna guess it's a soccer team. Is it Manchester United? It's the Dallas Cowboys by a very long shot. They have not won the most Super Bowls. They haven't won a Super Bowl in God knows how long. However, they have the Jerry Jones factor. And that is the difference here. Okay. So if SpaceX could be compared to the Dallas Cowboys, if you'll allow me that comparison, Elon Musk is the Jerry Jones of space exploration right now. And that is the reason that the premium exists above and beyond Rocket Labs or any other competitor. NASA, for example, is like looking to SpaceX and saying, yes, please do it, because he's just been such a great promoter of this is why we got to go and do this. And this is why we're the best at it. And this is why we're God's rocket company.
And it has Starlink. I wouldn't undervalue that at all, which I think is how they make most of their profit right now is, hey, we're gonna put internet everywhere on Earth.
So you're reminding me too of one of the other reasons why this Elon Musk mixing together things in a stew is such a thing to pay attention to, because I don't know the actual numbers on this, but of all of the companies out there that exist that do business with the federal government, Elon Musk companies at large have to be in the top 10, right? Like Northrop Grumman and Lockheed Martin and Raytheon and all these companies that have built themselves solely based on offering services and products to the government are one thing. But then you have Tesla that got a gigantic 0% interest loan from the federal government to stay alive so that EVs could come to the US and we could move fast. Then you have Starlink that is receiving tons of money from the federal government to do its business, tucked into SpaceX, which makes us focus on the rockets and not the government contract. And now we're going to marry that with an unprofitable company that's basically building an LLM to be in like 4th place. Only in this administration is something like this possible, because we were promised deregulation and a hands-off policy, and that is precisely, obviously, what we're getting here.
So I'm going to defend Grok a little bit, which I didn't think I
When's the last time you asked Grok a question that mattered?
Yesterday.
That mattered.
It is because I use it for here's the dirty secret. I think a lot of people use Grok, but they don't want to admit they do, because if you are on a CNBC panel, what is the social impact of you telling everyone, I use Grok and I love it, I think it's great? Do you want to do that? Even if you did?
I would venture a guess there's a few Grok heads that show up regularly on the network.
Okay. So the thing with Grok is it's the only one that has X/Twitter ingested into it. It's the only one whose memory is updated to today.
That's the unselling feature to me.
That is the selling feature to me, because when I want to know what the connection between different government officials and Jeffrey Epstein is, I'm going to Grok. And it's because it has the most recent stuff going on. It's very good at synthesizing news. I wouldn't undervalue the value of having the entirety of X as your content factory for your LLM. So I think it's tremendously useful in that regard. Writing wise, personality wise, it's definitely a little Muskian. There are a few things more uncomfortable than watching Elon Musk say, "Hey Grok, roast me, make it vulgar." Make it more vocal. And I'm like, okay, this is not that fun, but it's also a very useful tool. Back to SpaceX. The story is also something that like gets me excited. We are going to put factories on the moon. We are going to get closer to harnessing the full power of the sun to move us up the Kardashev scale, where we are not a species that only takes the power of Earth, but we're moving to the sun and then possibly the galaxy. So I think there's an excitement there with the story that is unmatched by pretty much any other company. And I also recognize that when this company goes public, it's going to be one of the largest wealth creation events in history, right? If shares are oversubscribed, when private companies are able to sell their shares, when this company goes public, there's going to be, I don't know if a huge amount of demand is the right word, but there's going to be a lot of private investors who are probably going to be cashing out.
Where's Tesla in all this?
Tesla's making cars.
But they're not, though. They just jettisoned 2 of their 4 car lines
for humanoids
to repurpose those properties to make robots. Like, where does Tesla fit into all of this hodgepodge of stuff and focus for one person who's trying to do all of these world-changing things at once? Like, if I'm a Tesla shareholder, I'm looking at all of this and wondering, like, where's the growth come from tomorrow?
But Tesla shareholders have never thought that. Tesla shareholders have defied gravity for over a decade. And
so is this another way to bet on Elon Musk for Elon Musk fans? When this whole thing goes public in the summertime, and now you got SpaceX/XAI is public, and now you got Tesla that's building the robot army. Do you own both of those stocks as a pair trade, because that's the way to bet on the genius of Elon Musk?
Yeah, 100%. Full stop, yes.
Or does Tesla acquire SpaceX XAI next year after they're both public companies.
Does SpaceX acquire Tesla? It's entirely
possible. Other way around. Tesla acquires SpaceX / XAI, and it all just becomes one gigantic mega robot factory.
So Tesla stock is 1.25 trillion. This enterprise is 1.25 trillion. So I don't know who acquires who. They're pretty much valued at the same.
Well, Elon Musk is great at raising money, though. So he could go find the money to pull off the acquisition. And so it wouldn't be a cash transaction. It would be a stock sale, a stock purchase. But I'm sure he could raise the dollars to pull off some, or, it's a merger. It doesn't have to be an acquisition, but, you combine the two of them and now you got a $2.5 trillion company that's taking over the world.
Are you going to be buying? Are you going to be buying at the IPO for some SpaceX shares? Are you ready? You ready to enter the Elon game, or are you in space at all?
Me the money. If you gifted me the money, I wouldn't be interested in using it to buy these shares. If you gifted me the money and said you could only use it to buy shares in this company, I would say thanks, but no thanks. I am intrigued by the space race that's happening right now, but I'm more interested in like the low orbit satellite aspect of it than I am space exploration or colonizing Mars. Like that seems extremely unnecessary, extremely unprofitable, and like a decades off kind of thing to be focused on. But I am very interested in how low orbit satellites are disrupting communications altogether and making them better. And then also what the market for that is and looks like, especially as companies are trying to bring the models that run the AI tools embedded in hardware devices closer to us so the answers happen quicker. Like that is fascinating to me, but I don't yet know how to invest in that ecosystem.
So AST Space Mobile is the one that has a lot of people excited. Definitely
ASTS.
Yeah, definitely a meme stock, but what they've been able to do is get contracts with some cell phone carriers with also, they'll say they're not a competitor to SpaceX, but our promise is that we're going to eliminate dead spots. And also just the internet traffic that we're able to provide is not that really, like, we can't do a ton of streaming video based on these satellites.
But you said it perfectly. At the time I became aware of it, it was already becoming memeified. Yeah. And I just was like, nah, I'm not playing in this party.
So when I was working on Motley Fool Money, I interviewed one of their executives, and there was two things that were interesting to me. He took the call, I think, from like a guest bedroom. So everyone, their fans were extraordinarily excited that they're like, this guy's sleeping on the floor, and this is exactly what we want from someone who's building right now, build mode. And then the second thing that happened is I released the full video. Not a ton of people were watching the videos, but I released the full video on a YouTube channel, and I released some audio on our podcast. And some of their fans, they're so rabid that they got upset that I cut one of the questions for the podcast version, because I was like, I just don't think this is super relevant to our listeners. It was about their relationship with retail shareholders. And it just like didn't feel, I was just like, this, we're running on time, and this is just a question I can cut that doesn't ruin the context of the show. They're like, why'd you cut it, bro? And I was like, this is the first time an editorial decision by retail shareholders has they've asked me questions about. Anyway.
That cultish aspect of stock ownership is fascinating to me, though, because it reverberates through the entire market. Like there's a lot of companies that have like a very cultish following of their CEO. Palantir is a great example. Yeah. Like Alex Karp's people are his people. Like they love the guy. He could do no wrong, say nothing wrong. Michael Saylor, I guess until Bitcoin hit $65, 65,000. Same thing. Like people were like, he's a genius. He knows what he's doing. Don't question him. Like that has changed the way the market operates. Like there's a lot of things that you look at and you're like, this should be going down, but it goes up.
It's the power of narrative. I need to look at the price, by the way, for Bitcoin, where MicroStrategy literally has to start selling their stock, not stock, but
we might be there.
Coins.
I was looking at that, and I think it was in the 70s.
70s?
And we dipped below that. We're at like 65 and change last I looked today. So look out.
This is also a narrative thing. Once the value investors and the LinkedIn CFPs start talking trash about Bitcoin when it starts going down, that's when I get more interested in Bitcoin, because historically that has actually been a good time to pick up Bitcoin. I understand the fundamentals are nothing and it's built on a dream. However, I think a lot of people have accepted it as a store of value. Let me get back to SpaceX.
I think. Wait.
You want to stay on Bitcoin for a bit?
I
want to talk about data centers. Data
you
centers in
gave
space.
me a compliment. Let me give you one.
Oh, that's nice.
I think that was the perfect framing, and you were talking so freaking fast, the listener probably didn't even catch all of what you said.
I can talk fast.
So the LinkedIn CFPs you mentioned are the professional advice community around money, right? The certified financial planner community that has hated crypto since the day it showed up. They've always talked about how it's not worth anything. It doesn't do anything. It won't, which I agree with most of it, but I also won't yuck anybody else's yum to say you shouldn't put your money there. To your point, it's a speculative asset. There's an opportunity brewing to speculate in this asset. And the point at which you might want to start paying attention is when all of the professional money managers, the professional financial advisory community gets extremely vindicated and starts crapping on Bitcoin and starts saying, I told you so. And we may be headed in that direction, so it's time to pay attention. I completely agree with that. And I might even myself be willing to buy some IBIT once we get there to ride that elevator back up.
And to be clear, this actually is important. What you said is IBIT, which is the iShares holding of Bitcoin. There's another one that's very popular, that's BTC, that is owned by Grayscale. I believe the fees on the Grayscale one are significantly higher than the iShares IBIT. So a small detail in what you said, but I think one that is important for the 3 listeners who are still with us. Let's get to, or actually, this is the reason I was rushing through Bitcoin, is I wanted to get to the space data centers, which is one of the promises of this IPO. And this is something that people are very excited about, but also a classic case of Musk being probably right about a technology, but maybe the timeline is a little bit different from reality, which is that SpaceX plans on building these space-based data centers. And there's advantages to this because, number one, you don't have to really worry about cooling in space. That's a big problem for your land-based data centers, is uses a ton of water to cool stuff down. There are complex things going on where being outside of a vacuum and within gravity can be difficult. That's the end of my physics knowledge there. However, this is something also, by the way, that like Jeff Bezos is interested in with Blue Origin, is what if we could use space-based data centers? So some really smart people are trying to build this up. The things that seem a little off right now, though, are this seems different from normal satellites. We have a GPS satellite, or we have an internet constellation satellite. And if it stops working, if it gets blasted by a solar array, we can just take it out of commission. The stakes seem a little higher on a space-based data center. And also, if you have an issue in your data center, you're going to need to figure out how you can get robots that can fix that. So I think there's and then the other engineering challenge, by the way, is that in order to harness the power of the sun that Musk would like to, you need to get these solar panels that are about 2.5 miles in width and length, which might be difficult to deploy. So I'm very curious to see how this goes, but I think there's a lot of engineering challenges that may take a little longer than the promoters are willing to admit.
I hate to use the word impossible, but this, in the way that it's being framed at the moment, just based on its size, seems impossible. Like, if you just think about how many components there are to the Mars rover that was launched a few years ago, it's like 6 components that all break apart at different phases of flight so that we can land this teeny tiny little rover on the surface of Mars. How in the world are you going to get something that's 2.5 miles in diameter up into space? Like, that just seems just ridiculous.
You fold it. Folds.
Here's how this does actually come to fruition. To your point, he's probably directionally accurate, but today wrong. I think that what will happen at some point in the next less than 5 years, but probably closer to like 2, is we will get a breakthrough in microchip technology that allows for far more compute power to be placed on one chip that consumes far less energy than it does today. I say that because the GPU is the go-to chip today, and it was an inelegant solution to a very challenging problem. Like the GPU was overkill for what it was ultimately used for because it was built for video games that need like 100 frames per second type speeds so that you don't have lag while you're playing Call of Duty. It wasn't made for the multiple equations that are being run, multiple questions that are being answered simultaneously today, the way we use LLMs. And so I think that one of these labs that is working on building better chips for AI is going to find the solution to the problem that eliminates half the data center usage or need that we've projected sitting here today, just because they'll need a lot less power and a lot less compute to solve the same problem. And that ultimately is what gets launched into space.
And it may come on the LLM side. The thing that I don't understand, and one of the things that I don't, if anyone can actually explain this to me, I would love them to. I don't understand how the engineering challenges of putting a data center in space are less than the challenges of doing a nuclear powered, saltwater cooled data center on Earth. Which is to say, there's plenty of engineering challenges with that one. These small modular reactors, salt water is a corrosive material. However, I'm like, there's got to be some ways that we can kind of figure this out in the meantime a little bit.
Are you saying that SpaceX should be focused on solving that problem instead of the Mars problem?
The AI problem?
The data centers on Mars are less important than the data centers on Earth, and that's what SpaceX should be focused on?
No, because the reason we're going to Mars is because there's going to be a catastrophic event on Earth, and we need to have a human population to carry on the light of consciousness throughout the galaxy. So you can't even compare those, Malcolm, because one of them is an existential thing, and one of those is a money thing. And the money thing is to actually pay for the existential thing. And that's why you have a little bit of a cult there. So I'm not about to tell the cult that they're wrong about the whole reason that they're a cult.
Do they think they're getting an invite on that rocket ship to Mars?
So I think that, didn't Musk say that I want to die on Mars, but not on impact, which was actually one of the funnier things. So
sure,
I think,
but I mean the people, the members of the cult, are they getting an invite? Are they getting the golden ticket to come to Mars too? Because there's a limited number of seats on this rocket ship.
We're getting reusable rockets, and I think more of them want to go than you would expect.
Are they going to get invited was my question.
I don't know.
Well, as you're talking about, I didn't really concern myself with the reasons for why people think Mars needs to be colonized in this way. But when you say it, we're going to destroy the Earth, and it's up to a few select humans to launch ourselves onto another planet to make sure that the human species can continue to thrive.
That's right.
As you say that, I'm thinking like, if you're not a billionaire with a rocket lab in production already, you're not getting invited to this party.
I think you're probably right. Should we finish up with this gambling thing?
Please.
I can do it quick. So this weekend was the Super Bowl. By the time you're listening, and I'm doing this to make myself publish it, I'll have a Substack about this. But one of the things that I've realized is I think that a few weeks ago, I was watching a sports betting commercial where they're like, deposit $10 and get $100 in bonus bets. I'm like, all right, I'm bored. I'll do that. And then I deposited my $10. I ended up getting it back basically. And then I got my bonus bets. And then I put them on. And then I was just casually watching the UFC. The bonus bets lost. And I thought to myself, this is stupid. What if I just used bonus bets in a way that's against each other to hedge them to create a guaranteed outcome? What if I did that on all of the sports apps that offered this and then just never touched these again? And I think you would be in the 1% of sports gamblers because you would come out with about $360 in expected value in Colorado. And this takes, the recipe for this, I would say, takes a little less than 2 hours of work, and it takes place over 2 days. However, I did this with Sam, my wife. She has no interest in gambling and doesn't really watch sports. So the perfect candidate for this. And I was only able to set her up on two. She was only to set herself up with my help on 2 of the platforms because she changed her name when we got married. So the identities didn't match up on a few of them, didn't feel like fighting it. And we were able to cash out with about $200. And basically what you do is you try to do an initial deposit, take the most likely possible odds you can for the first bets. And one of them, there's one bucket where there's a limit, one bucket where there's no limit. And then you use all of your bonus bets against each other. So you use your bonus bets to take both sides of a spread, meaning let's say the Denver Nuggets are playing the New York Knicks like they did last week. I'm going to use $120 bonus bet on the New York Knicks -3, $120 bonus bet on the Nuggets covering that spread. So no matter what, one of the bets hits, and you get from that, I think it would be like a little more than $18, right? So in doing so, you can essentially create free money for yourself, and then you take it, cash out, and then disconnect your bank account and delete the apps. This is my version of resist and unsubscribe. But anyway, if you do that, go take someone out for a steak dinner, and then don't gamble, hopefully.
So first of all, this sounds like way too much work for my brain.
That's why I'm going to have a recipe. I'm going to have an exact recipe, rickymulvey.substack.com, that you can follow.
This is why I don't trade options, because the amount of brain power that it's going to take me to perfectly structure my straddle so that I'm right in either direction that Nvidia shares move after earnings. Like, I don't want to have to do all that. I'd rather just go long the stock or don't own it. Like,
this isn't a straddle that you have to figure out. This is literally placing the same bet on both buttons.
Yeah. Okay. But I still have to actually select the sure bet that you mentioned I need to initially put those first dollars on so that it does go in the right direction more than likely. Plus, I got to download these apps. I got to connect my bank account. I'm not doing all this crap.
That's fine. That's what I'm saying.
However,
it takes a little less than 2 hours of work.
I appreciate how much you take enjoyment just in beating the system. Not necessarily the winning of it, but this is how I figured out how to beat the system, which I understand and completely respect. My whole point in all of this is, I hope that after you did all this to your poor wife, you will use some of those winnings to do something special for Valentine's Day, because in case you listening audience have forgotten, Valentine's Day is right around the corner.
That's a sweet place to end it. Thanks for listening. I'm Ricky Mulvey on LinkedIn, Rick So Slick on X. Speaking of which, let's plug X on here. If you're enjoying the show, make sure you leaving a rating where you listen helps. Leaving a comment on Spotify really helps. And Malcolm is at Malcolm on Money on social media platforms. And we'll see you next week.
Information shared in this recording and by its guests represent the views and opinions of the guests and does not represent the views or opinions of the host. This content has been made available for informational and educational purposes only. This content is not, nor is it intended to be, a substitute for professional financial advice. It is always recommended that you seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your personal financial situation.